got a strong rebound in crude oil following a new pullback low yesterday and a bounce off the 50 moving average support. But before we go further, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for crude oil. So I've been looking at a couple things that are important to understand. One, we have this rising parallel trend channel. The bottom of the channel was broken out decisively a few days ago. At the same time that a bearish flag pattern broke down as well. So on Tuesday, we had a breakdown of the flag, the line of the flag. Arguably, you could say a breakdown of the lower channel had already started to occur, but it really wasn't confirmed until the flag breakdown as well. So we had a strong breakdown from two patterns, but support was quickly seen around the previous lows here at a low of 65.63 and around the 50 moving average orange. That day ended yesterday with a bullish hammer candlestick pattern. It triggered today, and you can see that crude is set to close near the highs of the day and confirming a one-day bullish reversal of this hammer candlestick pattern. Resistance was seen at prior support becomes resistance, and the purple 20 moving average now at 67.69 and falling. Notice that resistance recently around the top of the flag was marked by the purple 20 moving average and the blue 200 moving average. That means that a breakout above the 20 puts the blue 200, 68.67 currently in sight as the next upper target. But one of the things that's interesting is that if the rally continues, we have a counter trend move counter to the bearish signals of the channel breakdown and the flag back breakdown. And sometimes failed patterns can lead to sharper, faster moves. And since this is would be heading up into a bunch of resistance, it's not the likely scenario that most participants will be considering, in my opinion. I'm not. I wouldn't be unless unless I was looking at what happened today. So, and if this all depends on what happens next, there needs to be an upside breakout before the next trigger. If that happens, then there is a possibility that there's an eventual breakout above the top of the flag, currently at 69.98. But again, it has to get through all this potential resistance zone. The strength indicated here, though, tells me that that possibility exists, especially given recent spikes in volatility here and here and here and so forth. And you can see you have a lot of order imbalances that happen on this sharp decline here, and sometimes those like to be filled, similar to what we see in a dynamic of a previous gap being filled. All right, that is it for today, traders. Have a great Friday.